What's going on, people? Welcome back. You should be excited. Tomorrow is Powell. We have the press conference at 2:30, and we have the decision at 2 o'clock, which will move the markets. All right, guys, this is what we've been waiting for, and it's the moment of truth. Will the Fed crash the market or save it tomorrow? Now, it is likely that they'll do a 75 basis point, but the question is, will they do 100? How hawkish will he be? How dovish he will be? How passive, how aggressive he sounds? There's going to be a lot of scrutiny on his for the speech tomorrow, and so please be careful. Tune in 2:30 p.m. Don't forget. Now, what is our wave count letting us know? We're still on the fence, guys. We're still on the fence. We're still deciding whether we want to go up or whether we're going to head lower. But because of this sort of anticipation, the wave count has been moving in par with a correction, with the idea that we are in a correction rather. All right, so let's review our SPY and Qs, right? Triple Qs. We're going to review both the bullish and the bearish count because it's going to let us know what we can expect tomorrow in anticipation of Powell. Now, we had a couple of good earnings today. We had a couple of bad ones. Google, we had Microsoft, we had Chipotle, we have Visa, which rocketed after hours. So go check them out because that's also what was moving the markets after the close in the session. Now, looking at the SPY, our bullish count still stands that this is the wave to complete it on June the 17th, which is right over here in this candle. Now, anything below south of that level, which is 362.38, will invalidate the entire wave structure, thus letting us know that the markets will continue on lower. Now, there are substructures within this zone here that we will, if broken, will let us know if the markets will head on lower. We don't have to completely wait to the invalidation level, but so far it is looking like the markets may continue higher. Now, I'm going to zoom in from price action over here so we can review what's been happening. Now, this has been a little tricky, right? Post June 17th, this at first looked like a correction, all right? And then we broke out of this correction, out of this range, and now we're trying to retest it to potentially head on higher. So broke out of the range, a retest, and off we go. All right, now zooming in from the daily to the hourly. Actually, one thing I wanted to touch base on was the fact that I believe we have broken south of the 50-day period moving average, or we are closing right at it. Now, we are holding it as support. We're barely closing above it. All right, so the 100-day period moving average still above the 411 region, and the 200-day still sits way up there around 430. So needless to say that it is a very, very critical point tomorrow, very critical day, and we must be very agile as to what we're going to do. All right, so sorry that I backtracked. Now down to the 1 hour time frame, and our wave count looks like this, guys. So from our June 17th low, right? Remember the 362.38 is our invalidation level. We have the wave 1, ABC pullback into the 2, which held support at the 618, which is pretty good considering that this was a pretty sideways correction. All right, 618 support, and now we're looking for a move that will confirm that this is the 1-2 or this is the 3 and the 4, right? But on the Qs, if this is the 3 and the 4, we've already invalidated the count, so therefore we are going to transition into calling this a 1-2 scenario. All right, so the count will look like this from our daily time frame to the 15-minute, right? Sorry, from the hourly to the 15-minute. So we obviously found support at the 618. There's too many 618s here, so I'm going to delete these. All right, 1 ABC, 2 618 support, broke out into the wave 1 at the resistance, right? 100% extension. ABC pull back into 2. Now here's where we are at, and here's what we need to do. All right, so we are holding above the 38.2% retracement and the 100% extension of wave A versus wave B, which is a zigzag. Wave 2s normally are composed of zigzags. Now, this is the other level that I'm telling you, besides the 362.38, that we should be be in the lookout for, and that is a break south of 371, which will invalidate the wave 1 if wave 2 continues on lower. Okay, if that's the case, then it is invalid and therefore not appropriate. But I do believe that we may hold support at the 38. I am positioning myself tomorrow to anticipate this move. If by any reason we start breaking south, my stopping point will be at the break of the 50%, which is 386. All right, anything south of 386, I will call it stop loss, because at that point I don't want to see this wave 2 pullback retrace this deeper. Now if it does and then we rip higher, there's always a second chance to get them back on board at the break of the wave 1 high, which is normally how Elliott wave is being traded anyway. All right, at the break of wave 1, it is almost confirmed that the wave 3 will be ongoing. So wait around this region if you haven't gotten on those spy calls that we got in on the trending waves. Right now, they are in the negative. Unfortunately, we got in a little too early, but nevertheless, we should be positioning for a good return should this continue on higher and hold support coming into the Fed, depending on their decision tomorrow. All right, so 389, 386 is the level to hold. Otherwise, cutting it, and we should transition over to our bearish count, which, speaking of which, we are going there now. So the bearish count in this case, back up to the 1 hour time frame, will suggest that we are in an ending diagonal. Okay, 3 wave to the 2. We're going to do a massive 3 wave to the downside for the 3 waves back up to the 4, final 3 waves to the to the 5 of C of wave Y of wave 2, which will complete somewhere down here between the 336, which will break the 350 mark that everybody is anticipating should the Fed coming very, very hawkish. Now tomorrow, I can't stress it enough, tomorrow will dictate what the markets will do for the remainder of the year. All right, we're entering the second part of the year already, which we already did actually. This is the 7th day, the 7th month. Okay, July, ending July, starting August. So it should be extremely pivotal, extremely important that the Fed, that we understand what the Fed is going to do, because that'll dictate whether or not we should take long positions or hedge our long-term portfolios. Okay, so with that being said, ladies and gentlemen, should markets continue on lower, you see this is becoming tricky because I've been telling you guys to watch out for the 400 region, or this zone over here, the zone of resistance that is actually holding. This is impressive, holding as the wave 2 of, sorry, wave C of wave 2, and now we're looking for price action to head along. All right, maybe price action will do something like this: 1, 2, 3, 4, 5 for the A, pull back, and we go. All right, who knows? We'll wait to see what happens tomorrow. Tomorrow is the actual you already know. Anyway, so you already have your marching orders. You already know what to look for in the SPY and the Qs. Sorry, in the SPY bullish and the SPY bearish count. Over to the Qs. Where is my count? So here we go. Same scenario, ladies and gentlemen. Same deal, right? So we are looking for a wave 2. See, now here, this is the reason why we transition over to calling this a 1 2 1 2, because if this was the wave 3 like we had before, we've already invalidated this interpretation, because we were hovering over the wave 1, the wave 1, wave 4 transition or overlap into the wave 1, therefore invalidated. And now if this is the wave 1, although it is a little tricky to dissect 3 waves out of here, not like in the SPY where it is a little bit more clear, right? 1 2 and 3, or A, B, and C. In the triple Qs, it's not that clear. So for that reason, I'm holding the SPY as my benchmark to dictate my possible scenario and outcome in the bullish scenario. Okay, so say for instance we hold the 50%, 38.2%. All right, looking at our divergence, we see that the RSI is trying to tick up higher. We see that the MACD is also trying to show its little bit of strength on the histogram, and then the curling of the potential crossover of the moving averages. All right, so maybe we should be able to see price hold into tomorrow, and then off we go. Otherwise, if we break south of that, then it is game over, and therefore we are going to look for price action to head on lower. All right, now you see here we are doing a perfect channel of the A and B, right? So it is likely that if this holds, then we are going to see price be stuck between these two ranges, or these two lines, and we're going to make our journey down into the $246 $228 region in the triple Qs, which will be pretty bad. At that point, it will represent at the very least more than 50% of the entire COVID rally. And let me illustrate. If we take a retracement from the low to the highs, okay, and we go at least the 50%, actually, yeah, it will represent more than 50. It will go down towards the 786, the 618. All right, not a good look, not a good look. We don't want to see price action go that deep because that'll be a very, very ugly haircut. Roughly 46% from the highs. All right, guys. So I'm not calling tops. I'm not calling bottoms. I'm just calling it day by day. I will be very, very patient tomorrow. I will try to see if I can add to my position in the spot calls to give me a opportunity for profits to the upside if the opportunity presents itself. Otherwise, thank you so much for tuning into the video, guys. Love you all. Take good care. See you guys tomorrow.